You are listening to Mining Stock Education.
I have known Zach Flood, the CEO of Kenorland, since he was in high school. I did business with his father. I'm a big fan of his. I'm a large shareholder of Kenorland.
Since 2016, we've raised around, I think, $35 million or so in the history of the company. To date, we've got about 30 million in working capital plus marketable securities. So everything we've raised in the history of the company is essentially still there in terms of our cash or equity positions. And yet we have applied over 120 million up until today into the ground on exploration. So when I talk about that capital efficiency, it's probably the best in the business for an early stage explorer.
Kenorland is one of the really truly superb prospect generators out there. And I would suggest that the current market capitalization of Kenorland is accounted for by its royalty on the gold discovery that it made in partnership with its Japanese partner. And I suggest that you get the whole rest of the company for free. And I think that the rest of the company is worth more than nothing. Is a superb way to enjoy the benefits of exploration without experiencing the risks of exploration.
Thank you for tuning in to Mining Stock Education. I'm Bill Powers. In today's show, you're going to be introduced to a new show sponsor, Kenorland Minerals, or Kenorland. I've heard it pronounced both ways. And the website is KenorlandMinerals.com. On the TSXV, it trades under the ticker KLD. On the OTCQX, KLDCF. Also trades in Frankfurt under 3WQO. Zach Flood, you're the co-founder and CEO. Thank you for sponsoring the show. And let's begin by talking a little bit about the genesis of the company. Now, you've launched this company 9 years ago in 2016. It was private. You went public. You've made a lot of progress, literally put over $100 million into the ground already in exploration. Talk us through the genesis and the business model that you employ at Kenorland.
Yeah, it's an important place to start. I think back in 2016, myself and the other co-founders recognized that there was a severe lack of true greenfields exploration, which I think was reflected in the discovery rates that people still reference today. There's just not a lot of grassroots discoveries being made. So we saw that as an opportunity in 2016. The market was hitting all-time lows. And we went out and we raised a little bit of capital privately to start staking some ground. And our goal was to make genuine grassroots gold discoveries. And so from there, it took a number of years to grow the portfolio to something a little bit more significant. It was a very organic path. You could almost call it like we almost bootstrapped it in a way, like working out of the garage sort of scenario. But in 2020, we had some success. We made a grassroots discovery in the Frotet Evans Belt with, at the time, our partner Sumitomo Metal Mining, which is a large Japanese mining company. And that sort of propelled us to go public. At the time, the markets were pretty hot too in the summer of 2020. So we were able to raise $10 million on an IPO, which helped us kind of scale up a little bit more, and we've been growing the portfolio and team and value of the company ever since then. So yeah, it's been a long path, not your typical path of your average junior exploration company, but I think it's benefited us in a lot of ways. We've been able to kind of stay true to our mission, which is grassroots exploration. We've been able to maintain a super tight share structure all along that way with really supportive long-term shareholders, and we've really kind of honed our skill in terms of explorers as well. And our exploration strategy, I think, is proving to be quite successful, because not only have we made that one discovery in the Frotet Evans, but we've made a number of other early stage grassroots discoveries. And so that's really where we focused in the space.
So going to that, the Frotet project in your Regnault discovery, you have a 4% net smelter return on that. Sumitomo Metal Mining's was your partner. They now own it 100%. How do you put a valuation on that? Because when I first learned of your company, it came to me through a friend. They pointed out when you made that transaction that they believed the entire valuation of your company was justified based on your ownership of that 4% NSR. So you get all the exploration that you're doing for free. How do you value it as a CEO?
Yeah, well, it's still really open ended in terms of the value there. You can look back on some historical transactions. Look back at, I think Great Bear Royalties was sold for $200 million US. They had a 2% net smelter return royalty on the Dixie project. That then Royal Gold purchased that. So that's one good example of a gold royalty that sold for a large, significant amount of money in recent history. A 4% net smelter return royalty, it's a very large number. There's a 0.75 buy down on that for 13 million. So that would leave us with 3.25% uncapped, which is still very significant. That means, 3.25% of the total value of gold at the time it comes out of the ground if it was in production, right? So there's no cost to us. A net smelter return royalty is an incredibly valuable and liquid asset, any sort of producing asset, if the project does end up at that stage. So yeah, when you ask me what the value is, I mean, it's really hard to say at this point. We're still pre-resource out there. There's no development decision, but as the project's de-risked, that value of the royalty should be reflected, higher. And of course, we have incredible leverage to gold price as well. Again, this is not about, profit margins for a royalty holder. It's strictly based on the price of gold at the time that the gold's produced.
So Zach, looking at this from the perspective of leverage, what do you, as the CEO and Kenorland as a company, leverage for investors if they buy shares in your company?
Well, of course, we talk about the royalty. There's not a lot of downside for us there in terms of what we have to do. There's no cost, no risk of dilution to maintain that asset. I think, not only do you have leverage to what's happening on that project as it's de-risked towards a potential construction decision, but there's all the additional exploration upside in the portfolio, which is, again, lots of early stage exploration, but considering the scale at which we're carrying out the exploration, it's a huge amount of optionality. And as we know in the space, one drill hole can completely change the picture. Most of the exploration is being funded by third parties as well across the portfolio. I think this year we've got about $36 million budget we're operating, and about 30 of that is from third parties. So, we have exposure to all this early stage exploration, potential new discoveries without the dilution risk to shareholders. So I think that makes it really attractive in terms of at least the risk profile. Certainly, there's less downside than your average explorer, and still I maintain that there's huge upside in even minority interests or royalty interests in any economic discovery.
If we could go back just to the beginning of the process of your business model, you stake, then you work that ground, you develop targets, and then you seek a partner that's going to fund the drilling of those targets, and then you see what comes out of that. Could you talk us through that progression, please?
Yeah, it's really first principles in terms of our exploration strategy. We're hunting in pretty well-known terrains and very well-endowed districts, such as the Abitibi Greenstone Belt or the Red Lake District in Ontario, or these other greenstone belts in Ontario and Quebec. That's really been our main focus in terms of gold exploration. First, we want to be somewhere where there's big producing mines, good infrastructure, and also other big gold deposits. Second thing we focus on is exploration maturity. So we don't want to be looking where other people have spent a lot of money looking for mineral systems. If an area has been heavily explored, it's unlikely that you're going to find something that someone else has missed. So we do look at that exploration maturity. So we want to be in lesser explored areas. On top of that, it helps in the Canadian Shield that there's a blanket of glacial till covering most of the rocks everywhere. So these gold deposits can be easily concealed under, a thin amount of material. So we look for, areas that are covered with that till. And then lastly, putting together a very large land package is important in grassroots exploration. You have to cast a wide net if you want to, catch some fish. So, the average size of our land positions are between 50 and 100,000 hectares, which is, bigger than most companies have in a single project or single flagship project, So we're looking portfolio wide at over, a million to 1.5 million hectares of ground that we're exploring at any given time, multiple different projects. And on each of those projects, you have to have a sound exploration strategy to explore it. So applying, large scale systematic GeoChem surveys has been our MO, to go out and do big glacial till sampling surveys covering those entire properties. So you can quickly kind of screen, large areas and find out where that footprint of a potentially hidden gold system is, and then focus in on that area and ignore all the noise, right? I mean, there's going to be gold occurrences all over the place in these rocks, and you don't want to spend too much money chasing the small things. You want to focus on the big targets.
So you get your partners to spend once you've identified the targets, but what you're doing, you didn't create this, but focusing on GeoChem, you're unique in that. I mean, of your 6.7 million spend that you're going to put out of your own treasury into the ground, most of that is going to go into GeoChem work, right?
That's right. I mean, they're large numbers because we're doing these huge geochemical surveys. I think, last year we collected around 18,000 till samples covering over 400,000 hectares of ground. A lot of that was in Ontario, new ground that we had staked, some stuff in Manitoba as well, and Saskatchewan. So, the quantum is quite large in terms of the total amount of expenditures, just, when you're looking at grassroots exploration, but it's the scale that's really driving that. And yeah, the end goal here is to, quickly screen a huge amount of ground, find the target, and then hone in on that and test it as quickly as possible. And within the portfolio, generating a number of these targets, because you can't rely on any single target to be the one. You're gonna test a lot of them out there, and a lot of them aren't gonna result in a big economic discovery. This is just the process of exploration, but it's really about building that pipeline. And I think that's where we're at today. Is we have everything from advanced exploration happening at the Frotet project to follow-up drill programs on initial discoveries we made over the last year or so, to maiden drill programs that are happening this year, to follow-up exploration on geochem targets happening this year, plus, additional ground that we're screening for the very first time this year. And of course, there's always new ground that we're going out and staking, or consolidating, that's at the very front of that pipeline, right? So, as all these projects go through the pipeline, there's a good chance we're going to find additional gold systems out there, as we have done.
So this year you're offering investors, is it 7 drills on site at 7 different projects, as well as all the geochem work and staking you're doing in the background to tee up things for the following year?
That's right. Yeah, there's like I mentioned, about $36 million of expenditures across the portfolio. $6 million from our end is mostly spent on large scale kind of greenfields geochem surveys. There might be some drilling up in Alaska that will sole fund on a small scale program, but the majority of that budget, another $30 million, is really being applied towards early stage drill programs on the rest of the portfolio. So a number of projects that are being drilled for the first time. That's always really exciting and a critical point in the exploration pathways. When you first put a drill on a brand new target, that's what can really change the game. So
not only do your partners pay for the drilling, but they also pay you to operate the project, don't they?
Yeah, that's been part of our business model, is to operate a lot of the exploration. Most of the exploration happening in our portfolio, we are actually operating, although it's being funded by third parties. And under a lot of the terms of our agreement, we're making a 10 to 15% management fee on those exploration programs, and so that does result in a significant amount of revenue coming into the company. as we structure these deals too, there's also cash payments involved or, equity payments. So we've got, exposure to some of these companies. But yeah, we've maintained about the same amount of cash inflow as G&A over the history of the company, which, I'm at least pretty proud of. And I think shareholders that can view that as like, what is the capital efficiency of this business? If you look at the cash inflows versus our overheads, we're operating at like a net zero G&A. So any money that we have raised has gone directly into the ground, right? I think that's an important point. But not only that, we've also leveraged, that into a huge amount of partner funded exploration on top of that. So I think by the end of this year, we'll have operated about $160 million worth of exploration. 80 to 85% of that has been funded by third parties. So it's a, huge leverage to third party expenditures. And I think that's really important in grassroots exploration, again, because it's so risky. It takes a lot of time. It takes a lot of shots on net to go out and test multiple targets. And so if you were to try to sole fund this in a single company, you'd have a lot of shares outstanding.
Your treasury, I believe, is at about 25 million. So you'll end the year at about 18 or 19 million. Is that right?
That's right. Yeah. There should be 18 or 19 million by the end of the year.
And then every year you're going to have your partners pay for the drilling. They pay you the operator fee, which covers your G&A. So basically the drawdown on your treasury will be primarily from doing GeoChem and staking.
Yeah, we look at it this way. Since 2016, we've raised around, I think, $35 million or so in the history of the company. To date, we've got about 30 million in working capital plus marketable securities. So everything we've raised in the history of the company is essentially still there in terms of our cash or equity positions. And yet we have applied over, 120 million up until today into the ground on exploration. So when I talk about that capital efficiency, it's probably the best in the business for an early stage explorer.
If we could talk again about the Regnault project that you have the 4% NSR on with Sumitomo, what would be maybe the next catalyst for that project that investors should be looking for?
Yeah, so back to the value of the royalty, as these projects are de-risked, again, the value will be directly reflected in probably Kenorland share price and our market cap. The milestones coming up are super critical. There's going to be a maiden resource estimate probably by the end of this year or early next year. Our partner Sumitomo Metal Mining will be doing their own work in terms of feasibility studies on the project. We are also working towards permitting an underground decline that goes down around 300 meters below surface. If Sumitomo made a decision to move forward on construction, which again would be based on the economic studies on the project and the resource estimate, but if they were to make a construction decision on that, I think that would signal to the market that Sumitomo is serious about building this project in the future, and of course that's going to be reflected in terms of the value of the royalty and therefore our share price. So these are really big milestones, very critical for the project's development. A lot of it's out of our hands. It's again, Sumitomo, which is a large Japanese mining company, owns a project 100%. They'll be taking over operatorship kind of middle of the summer. We'll still have close eyes on it. We're work very closely with Sumitomo. They're actually a 10% shareholder of Kenorland as well. We have other projects that we're working on with them outside of the Frotet project, but lots of milestones coming up over the next 1 to 3 years, I would say.
And what would be the cost of CapEx on that decline too?
It's hard to say. I mean, I've seen initial figures somewhere around $100 million or so. So yeah, if they're making that type of investment, then again, I think that really signals to the market where the project's heading, and that's I think really the most important thing in terms of valuing this royalty.
So they at least have to think it's a multi-million ounce deposit.
Yeah, definitely. There's going to be some sort of threshold that a big mining company would want to see in terms of total ounces in the ground. A lot of it's going to come down to economics as well. It's a high grade narrow vein system, so it would be, if it did go into production, it would be an underground mine. it's higher cost to extract the material, but typically these are much higher grade deposits. Because it's smaller tonnage, the total capex figure is always significantly smaller than, say, a big bulk tonnage operation, and the permitting's of course easier as well, as you don't have to go through that federal permitting process for a really large tonnage operation. So yeah, it's it definitely ticks a lot of boxes. So far, we've got good metallurgy out of there. There's good continuity, incredibly high grades in the system. I'm confident it's growing towards that multi-million ounce type of scale. So it's just, it just requires a lot of drilling and these studies that are going to be upcoming over the next few years.
You mentioned Sumitomo is on your cap table. Could you talk us through the cap table a little more? Who else has shareholders? And what's the float of the company too? Shares available to retail?
Yeah, retail's at around 28%. So I think it's fairly modest. Centerra Gold owns 9.9% as well. They came in last year as our second strategic shareholder next to Sumitomo Metal Mining. They provided us with a large capital injection of around $9.5 million, which we allocated towards, again, large scale grassroots exploration last year and this year. That money will be spent as that was a flow through financing. We have a number of other high net worth individuals, including well-known investors like Paul Stevens out of San Francisco. He's been a long-term backer. Rick Rule, John Tognetti is our largest individual shareholder, and John was our supporter from day one. He wrote the first check into the deal. And for those who don't know who John Tognetti is, he was the chairman of Haywood Securities, and is a very well-known financer in the Canadian mining space. On the institutional side, we have all of the major Quebec-based institutional funds, including CIDEX, the funds, SDBJ, and Caisse de dépôt as well, are all shareholders. And of course, there's Euro Pacific and Adrian Day. They're big shareholders as well in the deal. So yeah, it's a really tight share structure. There's about 76 million shares out, basic, about 89 fully diluted, which again is a really small number for having operated this company for 9 years now.
So you also have the South Uchi project that you're going to be drilling on, doing a lot of drilling this year. This is one that you generated and found a partner to fund it. And you also make your management fee or operator fee on that. This is about kilometers. I'm American, 90 kilometers to the east of Great Bears project that they sold to Kinross. Talk us through this. What was the process of discovery and what are the goals this year?
Yeah, the exploration strategy here, very similar to the Frotet Evans belt that led to that discovery of Regnault. We started with a really big land package, about 80,000 hectares in 2021. Barrick came in immediately after that. They saw obviously the geologic potential here and the Confederation Lake volcanics, especially as the Great Bear discovery was unfolding. They spent 2 years doing grassroots exploration, following what our initial exploration strategy would have been here, which was large-scale geochemical sampling. We were not the operator, so on one hand, we could see what Barrick was doing. They were doing good work, but they interpreted the results a little bit differently than we would have. They focused in on a few specific areas, and they didn't get the results that I guess to them they didn't warrant continued exploration. So they ended up terminating that agreement, and we got the project back 100%. And when we got a hold of the data, having had a lot of experience doing glacial till sampling across Canada, probably the most of any other exploration company, I would say, in North America, we've certainly probably collected more till samples than any other one out there. I can confidently say that. We quickly recognized that there was a gold target around one specific area of interest called the Paponga Lake target. And so we immediately went back in on that field season and did detailed till sampling over a really big area, identified a large-scale coherent golden till anomaly, followed that up with additional heavy mineral concentrate sampling for gold grains. That data set, again, showing us that there's a big gold system somewhere in that area. And then lastly, we followed up with detailed prospecting, which at that time we started pulling actual gold. We started finding actual gold in bedrock across a wide area. So what's really fascinating about this is when you go back into the historical exploration assessment reports and history of the area. There's no drill holes in this entire target area. There's no historical exploration or even prospecting reports where we found all this widespread gold. And there's no gold occurrences in any of the public databases. So this was exactly what we're looking for, which is a new gold system in an area of very prospective geology with a big footprint GeoChem anomaly. Like when you look at the 80,000 hectare property, this, sticks out, lights up like a light bulb. So at that point, we know, that we're onto something new and that there's a gold system here. It's not just some noise. Like I was saying initially, we want to ignore the noise and focus in on where there's an actual, gold system. And another company approached us and wanted to option it again, this private company called Orinoco Resources. So we signed a deal with them in December last year. They were able to capitalize their company fairly quickly. And we got our drill permits over the winter. And so, quickly, early this year, we built a 45-man camp. We have 4 drill rigs mobilized out there. And we just kicked off a 15,000 meter maiden diamond drill program with a budget of around $8 million. So this is a really big maiden drill program. It's, testing a very big area, about 6 kilometers of strike, drilling very systematic fences across the whole target area to get a better sense for what the geology is like. A lot of the target area is covered with either, swamps or glacial till and a large lake as well. So there's not a lot of exposure in terms of bedrock. So you really do need to get in there and drill a significant amount to understand what's happening beneath the surface. So yeah, we're super excited. Again, the process that led us here is very similar to what we did up in the Frotet Evans Belt, which led to that Regnault discovery. We made another discovery up in the northern Abitibi with Newmont a few years ago at Shabistawan, where we drilled 157 meters at 0.4 grams per ton. So hit a big, large intrusion with that was mineralized throughout with low grade gold mineralization. We're actually following up on that. That's another program we're kicking off this quarter as well. Newmont's funding a follow-up program there. Yeah, so we've done this a number of times. What's exciting is that these are all brand new discoveries. They don't have historical mineral occurrences associated with them. There's no historical drilling, and that's really what we're looking for is something new.
So applying again the lens of leverage to the South Uchi project, you got Barrick to put up $5.5 million, and you got all that data for free, right? And then you went to work, and now Orinoco is going to foot the bill on the drilling. They're going to pay you. You get, I believe, a 2% net smelter return on this project as well.
We actually pulled a 2% net smelter return royalty out of the project while we owned it 100%. And then we entered into this agreement with Orinoco. They have to drill 15,000 meters or spend $8 million to earn the initial 51%. And then they have another 3 years to spend an additional $10 million to earn another 19%, which would take them to 70%. And then our 30% is carried to a preliminary economic assessment on the project. And we also got 19.9% of Orinoco shares in the deal as well. So we've got exposure to their equity, we've got the royalty exposure, and we have the carried interest in the project as well. So yeah, without having to to put up any more money in the project until we hit that joint venture scenario at PEA, I think Kenorland shareholders can feel good about having a lot of exposure through a lot of different angles here.
And that's what you look for, right? That carried interest to where your 30% is carried.
It's tricky when you get into a joint venture too early on in a project, and then we're co-funding. So, typically we try to get an interest carried to some sort of economic study. So the project's been quite de-risked. So at that time when you have to actually step up and co-fund, the project's been, de-risked to a certain point. So you can say confidently, you think, that there's value there.
So Zach, we've only talked about 2 of the 7 projects that you're actually working on. Are there any more projects you want to kind of tease listeners with? What else are you doing that they should be aware of? You're doing a lot this summer.
Yeah, I mean, look, we can get into details of all these projects. I think later on, there's going to be lots of press releases on them. We have a maiden drill program at Hunter in the southern Abitibi with that Centerra's funding. There's going to be, again, that drill program in Alaska that I mentioned on an exciting porphyry copper target up there on 100% owned property. there's potentially, drilling happening in the Thompson nickel belt, as well as we've had a strategy there looking for nickel over the past few years, and we brought in a partner recently on that one. We've got drills turning for lithium up in James Bay on a project we vended out a couple years ago, and maintain a royalty interest on that. And then on top of that, I would say, what always gets me excited is the new ground that we're exploring. So, we got a lot of results back from the rest of our greenfields portfolio in Ontario, and there's some big regional gold GeoChem anomalies that we're going to be following up on this summer, which have, again, no history of exploration around them. And then there's a huge amount of additional ground that we had recently staked up in James Bay that we're going to be getting on the ground for the first time this summer, doing large scale geochem surveys out there as well. And so you never know what you're going to turn up when you go out and you work these huge areas. It seems like every time we've gone out and done a big property wide large scale survey, there's at least one or two targets that really jump out at you, that you can say, look, it looks like there's something here that hasn't been discovered before. And it's really about trying to manage testing all of these without blowing up the share structure. And so that's why we've ran the company the way we have, and kind of taken the path of the project generation model, I guess, as some people call it. But rather than trying to soul fund all of these things ourselves, because we know the risks in exploration. The first challenge is actually finding something new, but beyond that, you've got to find something very, very special to actually create real value for shareholders. It needs really to be an economic discovery or deposit somewhere.
Where do you see the company in 7 years?
Well, in 7 years, hopefully we're not around and there's a big takeout somewhere along that road. But it's hard to say with this much exploration happening. There's a lot that can happen in terms of where the company goes from here. Obviously, the royalty portfolio is one thing, and there's obviously a whole sector of our industry that focuses on royalties. There's all the exploration that we're doing out there that could lead to these, other interesting partnerships or joint ventures. Really hard to say, but all I know is that we're going to keep funding lots of this exploration, hopefully without diluting the shareholders, and we're going to keep making discoveries as we have done.
The company, again, is Kenorland Minerals. They're a new show sponsor. Ticker symbol KLD on the TSXV, and on the OTCQX, it's KLDCF, and the website is KenorlandMinerals.com. Zach, really appreciate this overview, and I look forward to touching base with you, bringing you on the show to talk about updates as the drills keep drilling all throughout the year.
Right on. Thanks a lot, Bill. Appreciate it.